All right, guys, I wanted to go over really quick kind of how a streamlined refinance would break down and how to look at it, because a lot of people are confused what that means. Aside from not even knowing what it is, what does that mean and how does that break down? So first off, what is a streamlined refinance? Well, a streamlined refinance is pretty much a modification of your current loan that you have if you have an FHA loan. FHA loan is a government loan. And what a streamline does is it allows you to keep that same loan, keep that same FHA loan, and modify the terms, whether that's a lower rate, a shorter term, adjustable, fixed. They have certain rules that they test that they have to pass to put you in a better position. All right. There's pros and cons to it. And we'll go over that briefly as well. But again, just a modification. You have to have benefit. Somebody can't give you a streamlined refinance if there isn't some kind of benefit. The number one benefit that we see with that is that you are lowering the interest rate and the mortgage insurance, because every FHA loan is going to have mortgage insurance by 0.5%. So what does that mean exactly? Loan amount is $400K. My rate is 6.5 to 7. Let's go 6.75. Why not? And if I got the loan prior to March of 2023, I believe it was, or April of 2023, my mortgage insurance, FHA calls this MIP for mortgage insurance premium, was 0.8 to 0.85. If you did what most people do, if you're getting an FHA loan, you're putting the least amount down, which is 3.5%. You'd be at the higher mortgage insurance premium, right? FHA has lowered that to 0.55, right? So let's just say this is a combined rate, 7.6. So the number one benefit of an FHA loan is that your new rate and mortgage insurance has to be at least half a point or more to half a point or more less to be able to qualify for a streamline. And if you do, streamline is a great loan. It has no appraisal required. It has no income documentation required. And it's really fast, easy, and cheap. Normal costs on these, by the way, I mean, lender fees, let's go over cost. Lender fees can be anywhere from $700 to $1,700 for these loans. Just depends on how they roll it in. Sometimes they won't show a processing fee and it's built into the pricing or the rate, or an underwriting fee. Sometimes they lay out all their lender fees. It's separate, right? But you can expect that depending on your state, your title and escrow. Again, that might be anywhere from $900 to $2,700. All these other little fees. Let's just call it, others. Well, let's call it two. Rate. And that's where you get like points. You hear people say it's 1 point, it's 2 points, it's a credit of 1 point. And then we'll just call it other. That's, whatever, title and transfer tax and stuff like that. I'm just going to call it, I don't know, $300. I don't know. Again, these vary a lot. If somebody says they're all the same, they're not. Everybody's different. Title and escrow could be depending on who you use for title and escrow, what state you're in, what loan amount it is, right? Different fees. Recording might be different per county or state. They might have a tax service fee that is different depending on the services that the lenders use. So don't get too caught up in that. Mainly what you're seeing is it going to cost me money out of my pocket or not? So I'm going to say where I'm at, we're going to be on the lower side, which is good here in California. I mean, I might have 900, 700 between this, and this. I'm at about $1,900 of cost, we'll say, right? So what that means is if this is my loan amount, or rather, this is my new loan amount, I am not going to be able to increase my loan amount. So if I have no rate points, I might have to come out of pocket with, say, oh, you know what? We forgot one here. Let me shrink this down. Taxes and insurance. Again, varies depending on the time of the year, what you pay for insurance, what you pay for your taxes, your property taxes as well. So I might have $1,900 of cost plus taxes and insurance. I'm just going to throw a number out there. It might be 2,000, whatever. Right? So that I have to do. And again, there's other ways to work around it. You could do it. You could transfer them if it's the same lender. Sometimes you can keep the escrow, but a lot of times what you'll do is you'll pay this out of pocket. They'll fund your loan, and then they'll go back and they'll refund you whatever balance you had in your escrow account for taxes and insurance after that loan closes. So a lot of times it's like you'll pay this amount, which is a little bit higher than the refund you're going to get. And that's because you're not going to have a payment for 1 or 2 months. So if the monthly fee was $400, then you're going to probably pay $400 to $800 for 1 or 2 months of skipping payments that they have to add into it. So in this model here, I'm not talking about any rate costs or credits here. I know if I was to do this loan and I wanted to save my 0.55 to get a lower rate, I'm probably going to come in with $3,900 to close that loan. I'm not adding it to my loan. I might only be saving, $70 or $80 or something like that a month, and I'm paying $3,900. But like I just said, I'm not going to have a payment for 1 or 2 months, however that's structured. So in this model, I might have a payment that costs me $3,500, right? Or $3,000 or whatever the case is. So you kind of trade skipping payments for paying the costs out of pocket in most of these scenarios to get that lower payment going forward, right? Which is great because I could go back and be like, I paid $3,900. I got to skip my 1 or 2 months payment. So I kind of broke even there. I saved $75 a month or whatever it is. $75 times 12 is what? That's not right. 75 times 12. That's pretty easy. That should be like $900. Yeah, $900. So I'm saving $900, a year. And that helps, right? FHA, let's try this again. The computer freeze. Has MIP, monthly insurance, and UFMIP. This stands for Upfront MIP. Monthly insurance premium or mortgage insurance premium, upfront mortgage insurance premium, right? When you first got this loan, you paid 1.75. That was financed in your loan. That was financed on top of your loan. You pay that. Now, when you get a refinance, the FHA will actually give you part of that refunded back, depending on how long it's been since you refinanced within the last 3 years. The sooner it is, the more you get back. The longer it goes, the more they keep. Regardless, that part will get financed into your loan and added back into your loan. Confusing, I know. But if I was looking at this example here, let's see, can I get up to it without getting into stuff I don't want to see? I can see my current loan balance is $267. My loan amount's $271. Why is that? Because down here, you'll see there was a, no, it goes under, up here. That 1.75 will be charged again, right? So you will be paying that. You'll be financing that back into your loan. Now, the good part about that is, I can never remember where they put it here. Oh, is it under credits? They get a part of that refunded back. Again, FHA rules, the sooner you do it, the better. If you're at 2 years and 10 months from when you got it, it will be a lot less, and you'll have to make sure that it still makes sense for it. But again, that can be financed into it. And if you want, you just Google FHA MIP refund chart. There you go. Boom. Image. You want to see how it looks? There you go. Year 1, first month, 80%. 12 months in, 58%, half of it back almost. I guess half of it back is about 4 plus 12, so about 16 months in. If I wait till the last month, I'm only going to get about 12% of my money back. I'll have to finance the rest into it, right? So there you go. That's a good way. Regardless, A lot of people sometimes will say like, oh, it's not enough savings. It doesn't make sense to save $75 a month. But again, if you're not looking at the big picture, if you don't know, you don't know. And if you're not understanding it all, then that's shame on you, because you should really ask questions and you should talk to people that can explain it to you. Hope this helps on Streamlines. Go over some other ones as well down the road and products and how they work and if they make sense or don't make sense.